Okay, candle range theory trader back with you with another video talking about how to trade the daily candle range theory using the 8-hour chart with a special bonus at the end. So let's get going. Now, as we know, let's just say this is a daily chart. We only focus on this channel for trading candle 3. We do not try to trade candle 1, of course, and we're not trying to trade candle 2. We only focus on catching this candle right here. Okay, so each daily chart is made up though of 3 8-hour candles. There are 3 8-hour candles in this large down move. All we're trying to do is just trade one of them. So the times to trade the 8-hour chart or when each 8-hour chart, each hour candle opens. These are Eastern Standard. Is 1700 or 5 p.m. Eastern Standard Time. That's not ideal and not going to be the focus of this video. It does play a part, but it's just not the primary focus. Really, we're only trading 2 times, for the 1 a.m. open or the 9 a.m. open, right? Ideally, the first hour of each candle is best, except for, of course, 1700, like I said, because of the market spread. But really, 1 a.m. and 9 a.m. are best. So how we expect candle 3 to look is this if it's long, and our goal is to buy near or around the low of the candle or near the open price of the candle. This is where we're trying to buy at right here, and we just expect expansion to the upside. And when we're trying to sell, we want to sell near the high of the 8-hour candle we're trading or around the open. As long as you're in anywhere around this bottom, you could say third of the candle, if you were to split it up, or fourth of the candle, if we were to split this up into 4 different candles, you want to be in at this top part. For long examples, you want to be in near the bottom part. All right, so let's keep going. Now, the main reason I'm making this video is because I tend to overtrade, just being honest, right? When I'm trading the daily chart specifically, because I would focus on trying to find the high or low of the day. I realized I really needed to narrow my focus and decided just sticking to trading the 8-hour chart but using the daily time frame for bias can still be beneficial to me. So instead of trying to find the high or low of the day, I'm only trying to find the high or low of one 8-hour candle, the 8-hour candle at 1 or the 8-hour candle at 9. So there was a shift in focus. Now, so let's get into some caveats and some rules. So if you get stopped out, and you will, trading this method, you want to wait 1 to 2 hours before entering again on the next change in state of delivery. I'll talk about what that is if you do not know. As well, I'd only recommend giving each pair 2 chances. Don't give them unlimited chances, because in an 8-hour chart, it should behave a certain way. It shouldn't just trend down, down, down forever and then reverse at like 5, 6 hours into the candle. No, because remember that if you're looking at an expansion candle from a time standpoint, it's supposed to spend most of its time going up, going down if you're short, or going up if you're long. It shouldn't spend hours down here and then let's say on hour 7, okay, well now I'm just going to run up. No, it really shouldn't do that. It should be a slow, steady trend. So, 2 chances. That's it. If you get stopped out twice, just look for the next 8-hour candle. And I recommend that if you win, let's say if you win at 1, if you make your money during the Asia London session, don't give it back in the USA session. Okay, and I've done that more times than I care to count. Okay, so let's keep going. This is a example though of the stop out rule in action. So obviously everything is easier in hindsight, but let's just say hypothetically you're trading this 1 a.m. candle. All right, you see a good candle range theory on the daily, you drop down to the 5-minute. We trade on our 5-minute chart. Okay, and now the change in state of delivery is this, and I wish I put the line there, but I did. This black line is the open price of the candle. So that's what, remember what I talked about, you want to buy near or below the open price if you're long. So this black line is the open. The chain and state of delivery, your job is to find the candle that creates the low of the 8-hour candle that you're trading. So in this case, it would have been this red candle right here, and I hope you can see that. When price closes above that candle, that can be your signal to enter the trade. So that would have been right there at 1:25 a.m. And this low, the candle that creates the low, you're expecting it to hold. It really shouldn't even get threatened. But let's just say it does retrace. As you see, your price spikes up and then it retraces down. And let's just say you get stopped out right here at 2 a.m. We wait for all this consolidation. You see this is dancing back and forth. We wait because 2 hours later at 4:30 a.m., that's when the best entry was, right here. This red candle created the low. This green candle closed above it, and then price went up. Don't retraced a little bit, teased. They gave you a second chance to get in, but then after that, as you can see, price rocketed up. This is the type of price action that we're looking for right here. Okay, with this steady up. ZI spends most of the time up in these steady moves, but it shouldn't spend all day consolidating. It's going to consolidate some, but not too much. All right, so 4:30, that would have been your best entry, and then you just enjoy it. You spend the most of your time will be spent waiting for the profit to be hit. Here's one more example of a stop out rule. This one's a better one, where this red candle created the low. It went up, simple railroad tracks. But then price came back. So the first entry would have been at 2:10 a.m. But we got stopped out around 3. So about an hour and a half later at 4:35 a.m., a new low did form right here. Green candle closed above it, and then we're just off to the races. It did retrace some again, but at the end of the day, price this low held, and that's the main thing. When you see the low of the candle, what you believe to be the low of the candle, the 8-hour candle you're trading, price shouldn't come back to it, right? It should not even be threatened. Yes, you're gonna have some retraces, but this low is a non-negotiable. If this low gets tagged or taken out, then the structure breaks down, right? So 1 hour, 30 minutes later, like I said, price went up. Now, there is something that I call the 1700 candle test, which is just the first 8-hour candle of the day. We're not trading that time, but we do like to see that that candle is the color of your bias, and it also creates the high or low of the day. The strongest daily expansion candle is just made up of three colors. I'm sorry, candles of the same color. So if it's a big old fat red candle, it's going to be three red candles, green, three green candles. Obviously, like so. This is the daily candle, and you have the 1700 candle here. This is already done. So by the time we come to the chart at 1, we're trying to trade this candle or this candle. That's it. Okay. And then by the time the day closed, okay, you got that. Now, is every candle going to look like that? No, because sometimes you'll get a good CRT setup on the daily, but you may get something like this when the day ends, where you have a 1700 candle here. It's just a lot of consolidation. This 1 a.m. actually created the low of the day. We want 17 to create it, but sometimes it may not. It may get tagged and then come up. But price didn't. It opened here and closed up here. Not a very dramatic move. So my point is, take what you can get. A good goal trading this method, I say, is anywhere between 40 and 50 pips. If you can stick with a 10 pip stop loss, then you can expect to get 1 to 4 to 1 to 5 trading the daily chart. That's what I would aim for, 1 to 4 or 1 to 5. But at the same time, if you're trading the daily chart per pair, you're probably only going to get one trade per pair a week. So that's just, it is what it is. Now let's take a look at some real chart examples here. So this is a daily chart. For candle 2, 1, 2, 3. I like for candle 2 to create the high of the week if I'm trading on the daily chart. That's one of my non-negotiables. So let's say if we come to the chart and we see day 1 and day 2, then this is our candle 3. This is the day that we're going to trade. So now we see which candle, 8-hour candle, is worth trading. Forgetting the 1700, we're only going to focus on 1 a.m. or 9 a.m. So let's see. So in this case, between the three, the 9 a.m. was the best. But why is that? 5 a.m. did create the initial high of the day, but then notice how 9 a.m. took it out. Everybody who went short here may have gotten stopped out, right? So if we tried to trade the 9 a.m., it's possible you could have caught the high of the day. But remember, my focus is really trying to find the high of the candle. And just looking in hindsight, I decided that 9 a.m. was best because the high of the day was already established. 9 a.m. also closed below the 5 p.m. candle or 5 a.m. candle, and we just expect a move to the downside. That's it. So that's the main thing. So this isn't necessarily candle range theory. We're basing candle range theory on this structure here, and from then on out, we're just trading these candles. So if we see one red candle and the next red candle close below it, that's a great sign. To reiterate that, let's take a look at our example here. You have one red candle, and then the next red candle closes below it. The odds of a continuation are stronger. Not guaranteed, that's the odds are stronger. That's the point. Okay. But see how here, none of these closes closed above or below. Each candle's high or low, they just chopped around. So this is not the best sign to see. This right here is closed below, and they just expect continuation like that. So let's view the 9 a.m. candle, this candle right here on the 5-minute chart, and look at our best entry. So this one here, you could have got in right at 9:10. Remember this black line here is our open price, and it just went straight down. You weren't even in this trade that long. This would have been a 10 pip stop loss. We have some fair value gaps to show a momentum, and you just take what you can get. Like I said, 50 pips would be my goal for trading this method at the end of the day. Because if you notice here, after it dropped 50 pips, it spent the rest of the day in consolidation. Right? There's no reason to be in the market after this. There really isn't. Okay, and because keep in mind, look how far price already fell. Okay, from the open down here, and you're trading right here. So yeah, that 50 pips would have been more than enough. And you just scale in a couple times, you would have been good. All right, next example, we got another short. So we have day 1, day 2, and day 3. This is Monday, Tuesday, Wednesday. So we're trading the Wednesday candle 3. So let's see which 8-hour chart was best. In this case, it would have been 9 a.m. But there is a catch with this. 9 a.m. also created the high of the day. It swept above the 5 a.m. candle. But notice that price, when it opened at 9 a.m., it went up above the range high, we got our change of state of delivery right here. This candle created the high of the day. So sometimes there will also be the high of the day that's in play. The high of the day and the high of the candle may be synonymous, but this was also during FOMC. So that's why the price spiked down in the afternoon. Not the best example, but it did still pay out 50 pips. So, but your entry would have been at 12:10 p.m. And then once the change of state of delivery comes, where price closes below the candle that creates the high, then it was just pretty much a straight drop from there. So, but am I saying that you need to trade FOMC or non-farm? No, because that's still a gamble, right? It just happened to play out, but it just because as easily could have gone the other way. I've seen it do both multiple times. So this is just an example, but I'm not saying trade news and take that gamble. I'm not saying that. Okay, so example three, we have a daily chart here where we have the range candle, one, candle two, which is Thursday, which swept below the low, closed inside of it. So while this isn't a doji, we did see that price did come back. This is an expansion candle to the other side of the range on the daily. So let's see on the 8-hour chart for this day right here, this Friday was the best one. Okay, but remember, this was candle two because it swept below the low and then closed inside of it. So between 1 and 9, we actually had, this is a great pattern that you want to keep an eye out for because we have three candles in a row, 1, 2, 3, that did play out. The best candle would have been 1 a.m., which is this middle one, obviously. However, the 9 a.m. candle did give a retrace to the 50% level of candle 2, the 9 a.m. candle, 1 a.m. candle, and then came back up. So if you could have caught a 50% retracement on this one, then you could have got a more option or a better option to also trade this one as well. So let's take a look at first at the 1 a.m. candle, this middle candle right here. Of course, and it did pass the 1700 test as well. First candle green, so you just want to see the next two be green as well. So this is 1 a.m. Price chopped around a little bit. The low wasn't created until 6:40 a.m. That is longer than I care to see. I don't know if this was news related or what. However, sometimes it is what it is. So the initial low was the low of the candle though was actually right here. So if you hopped in right here, right at 1 a.m., you would have been in profit for a little bit, but then you would have got stopped out right here. So obviously it did create just a double bottom, same thing. So this would have been your best re-entry. I don't know what time frame this was, to be honest with you. But between 9 and 6, obviously is a long time. And but this was it right here. This was the best entry between 640, and it gave you one more chance right here, just a W pattern. For those who've been trading for a while, you know what that is. You just got leg one, leg two of the W. So just be mindful. Sometimes you go to a W pattern near the candle range theory low, and then it just spiked up. So that would have been good for, I believe it was a 1 to 5 on this one with a 10 pip stop loss. So getting stopped out here is no big deal if you could have caught the second move. So if you would have gave it two chances, that would have been fine. Because when you got stopped out on this low, remember, all you're doing is you're waiting for another low to get created. Another option you can take as well, instead of time, is measuring to see if it's anywhere between 20 to 25 pips below the open. That could also be a good sign that it could be like a stop hunt or a pullback. So you can measure from the open of the candle down to what you perceive to possibly be the low. And as long as it's inside the range, try to get in there and see what you can do. So yeah, but that was that. So between 6:40 and 7:55 to 8:05 a.m. was the chance to get profit on that one. Now for the 1 a.m. candle, for the 9 a.m. candle, this purple line right here is the 50% retrace level. So this purple line right here is right here. Okay, it's half of this big old expansion candle that happened at 1. So price opened, it came back down, and then closed up and completed the range. All right, so let's see how that looks again here. It opened, went up a little bit, went back down, consolidated, and then shot up, right? So the best entry would have been right at the purple line. You want to try to see the low of the candle near or below this purple line. And of course, it's below the open price of the candle as well. So that's good. And then, anywhere entry here, it give you plenty of time from 11:20 a.m. to 12:10 p.m. Could have been you. So that's almost an hour that you could have got in. The low did hold right here. And then you're just off to the races. It went up. That was good. 50 pip rise. So like I said, 1 to 5 on that one would have been great. But remember, the non-negotiable, this low must hold. Your stop loss goes below the low of what you believe to be the candle. Now, here's another daily chart where we have Monday, Tuesday, Wednesday. Candle 3 is Wednesday right here. So let's look at the 8-hour chart for this long green candle here. So we have 1, 2, 3. Okay, so let's see. And in this case, 1 a.m. was best, and you could have held. If you want to hold for the next 8-hour candle, you can. It's up to you. But let's just take a look at 9 a.m. to see how that looked. It also passed the 1700 test. Can't forget about that. But this right here is the 1 a.m. candle. So price did have an initial low right here before it got closed above right here. So that was a great one. But then the real low came right here. So the best entry would have been at 245. But I do, when you're back testing this, it stands to reason to take a look and see, okay, would I have been stopped out if I traded in the first hour? And in this case, you would have. If you would have taken this entry here, you wouldn't have gotten stopped out. But it's okay. It's not the end of the world. You just wait for the next low. But remember, it's only two chances per 8 hour chart. So the low is here, didn't even get threatened, and price was just slow, steady climb. That's what you like to see for the majority of the candle. That was a 50 pip rise. Okay. Change of state of delivery. Obviously, I did isolate it on this one because this candle created the low. Once it gets closed above, you enter and then you just enjoy the ride if you're right. Okay. So in conclusion, while the first 2 hours of the 8 hour candle are best, sometimes the play may come later. So you just got to be prepared for that. I showed you one that didn't play out till 6, but you started trading at 9. Or I'm sorry, 6, but you started trading at 1. So, set alerts, things of that nature. All right. Your only goal, though, is to find the 1 to 5 minute candle that creates the higher low of the 8 hour candle. Then wait for the change in state of delivery. Okay. Wait for that low to be closed above. Wait for the high of the candle to be closed below on the 5 minute chart. Risk management is always number one. If you don't know how to manage risk, none of this will do you any good. And candle two on the daily chart ideally should be the high or low of the week. Okay, that's how I trade. It doesn't have to be, but that's just what I prefer to see. Okay, so for the special bonus, you can also use the 8 hour candle range theory and 4 hour chart for entries. And just a brief example, this is an 8 hour chart. We have candle one, candle two, and then candle three. Remember that this candle three on the 8 hour chart is made up of two 4 hour candles. And ideally, you would hope to see two green candles. That would just make them up. So if we go down to so if you want to go, don't want to use daily or just 4 hour. I'm sorry, if you don't want to use the daily chart, but just the 8 hour chart to find your range candle and money candles, then you can do that. And then just try to trade this candle three using the 4 hour chart. And you would trade at either 9 or 1 p.m. That's one 4 hour candle. That's two 4 hour candles, even though that's not. 1 p.m. didn't give much of a move. The best moves are really going to be at 9 or possibly at 5 a.m. But that's that. So you can use the 4 hour if you like. Backtest that on your own though, like I said, but all you're doing is just going from the 8 hour to the 4 hour. That's it. And then you can still drop down to the 5 minutes, try to find those entries. But at the end of the day, that's it. That's all you're looking for. So I hope that makes sense. So remember, you have the option to use the daily to 8 hour, or you can also use the 8 hour to 4 hour. And you're just trading in those time blocks, but you're really just trying to set a schedule and know, okay, this is where I want to trade, or this is when I'm just going to stay out of the market. And either one of these is fine. But for the most part, for me, I start trading at 1 a.m. If nothing pops off at 1, try again at 9. But if I win at 1, then I'm just done for the day, and that's it. So I hope that helps. Backtest it, take screenshots, build your library. If you have any questions, leave them in the comments. Be sure to like and subscribe to the channel. I appreciate your time and attention, and have a great rest of your day. Take care.